Hey, welcome to StockShark. In this session, we will be looking at what would be the reason for last week sell-off. Is it really a trend changing? All along last 1 year, we have been in bullish mode. Are we, going down further? Let's look at both fundamental as well as technical. I mean, both macro pictures as well as technical in next few minutes. So the first one is we all know that 16th July was OPEX day. No wonder usually market behaves highly volatile towards OPEX day. So that's why I think the dip could have been started on 14th July. Yeah, so that could be one of the reason. Also Tuesday, that was on 13th July, the CPI report came out with a bit negative surprise. It was like 5.4% inflation, which was much higher than what Street was estimated. So that put kind of jittery in the trading desk, whether Fed is losing the control, whether Fed going on right track. We don't know yet. Let's see. Also, subsequent speech by Jay Powell in the next 2 days created a bit of volatility as well when he was defending the existing rate policy and grilled by various Congress men and women. So that actually created a bit of volatility. Also, if the 10-year bond, it's almost touched 1.29, 1.3% all-time low yield for this year. So when bond rate yield going down, that means the fixed income market expect the long-term viability of the economy look like bit shabby. So that could be also one of the reason that are we fighting for deflation here? So that's one thing. Also, the Delta plus variant, the cases are rising across the country. If you look at the COVID cases, the daily cases are really inching up from 29 to 30, 31,000 as on today, July 18th, 2021. The cases are inching up, so this curve is really, doesn't look good. It's look like the cases are going up, but it's nowhere near what we were seeing back in January, this 200 250k mark. So the daily cases are still way lower, but the percentage wise looks bit concerning as more vaccination penetrates. We expect that this will go down. Let's next to look at the technicals. That is very important. If you look at, I'm looking at the broader market SPY ETF, which is popular ETF, to look at the macro picture. It actually on Friday the dip buying was not at all working, and if you look at it broke down the 10-day moving average. It's close to 431, which was way lower than 10-day moving average 434. Then the next support is on the 50-day moving average 422.97. So that means 424, 425 could be the next support. But short-term momentum also going down, and I'm looking at, but intermediate term, long term doesn't look like market is changing any of the existing trend. That means in my opinion, market is still bullish for intermediate to long term. That means a month from now, 2 months from now, I think market will be trading higher, and for longer term, market is still bullish. ADX also showing positive side, but for next 1 or 2 weeks, I would expect market to dip further. Maybe try to test 50-day moving average 423, 424 area, or it may stop nearby 428, 429. Then could resume uptrend, because next week earning from big tech big techs like Apple, Microsoft, Facebook, Amazon, everyone is reporting. So they, that provides solid support. So that's it, folks, for this week edition of Recap. Wishing you all the best for next week trading.